Hey everyone, welcome to today's Explainer. We're diving into a tech-driven news cycle where, honestly, we are just running out of superlatives. Billions of dollars are pouring into artificial intelligence and silicon right now. But this isn't just a story about Wall Street. The massive scale of today's tech R&D is creating this relentless undercurrent that eventually flows right into our homes, literally changing how we work, how we manage our health, and, believe it or not, even what we cuddle with on the couch.
So, how are record breaking stocks, Elon Musk's lawsuits, and a snuggly Roomba all connected? Well, let's figure it out. On the surface, these might seem like totally separate events. I mean, what does a multi billion-dollar AI startup have to do with the gadget on your wrist or the vacuum in your hallway? Today, we're going to connect those dots. We'll start by zooming way out to the macro market highs, navigate through some incredibly messy corporate battlegrounds, and then zoom all the way back down to what's happening right in your living room. Section 1. The unstoppable tech market. The S&P 500 just closed at its 15th record high of the year, right alongside an 11th record close for the Nasdaq. And to understand why these records are shattering, just look at this number, 27.7%. That represents the overall corporate earnings growth rate for the first quarter. To put that into perspective, it's the absolute best rate we've seen since late 2021. With nearly 90% of S&P 500 companies reporting, a massive 84% of them beat their estimates. It absolutely proves that despite any broader economic anxieties, corporate America is just crushing it right now. Now let's match up that corporate success with the broader economy. The U.S. economy recently added a very solid 115,000 jobs in April, way ahead of the 65,000 expected, and unemployment held incredibly stable at 4.3%. So, on one hand, that's phenomenal news for the economy, but on the flip side, especially if you're looking for cheaper borrowing, these solid numbers mean a Fed interest rate cut is highly unlikely this year. Actually, scratch that. The market thinks if there's any move at all, it might even be a rate hike. But as we just saw with those massive earnings, for these tech giants growing this fast, the interest rate barely even matters. Under the hood of these record highs, the sheer, overwhelming weight of the tech sector and AI demand is basically dragging the entire market upward. When you look at the top daily gains, Akamai Technologies up 26.6%, SanDisk up 16.6%, Micron up 15.5%, and Intel up 14%, you can see exactly what's driving the momentum. In fact, on the very day the S&P gained nearly a full percent, way more individual stocks actually fell than rose. It is a wildly top-heavy market, and tech is doing literally all the heavy lifting. Section 2. Intel's incredible comeback story. Zooming in on one of those top gainers, we find a truly fascinating corporate battleground. You've probably heard the classic T.S. Eliot quote, "April is the cruelest month." Well, for the once struggling chipmaker Intel, April and May have been anything but cruel. They've been phenomenal. Over just the last month, Intel shares have more than doubled, rocketing to an all-time high after they successfully signed Apple as their newest customer. This turnaround timeline is just wild to trace objectively. 9 months ago, Intel was struggling so much that the Trump administration swooped in with a $9 billion rescue package that essentially made the U.S. Treasury its biggest shareholder. Now, riding this massive surge in data center CPU demand, they've straight up locked in huge supply deals with NVIDIA, SpaceX, and of course, Apple. CEO Lip-Bu Tan has some serious momentum right now, and if they keep delivering, the future looks incredibly bright for shareholders and, by extension, the American taxpayers. Section 3. AI's messy corporate battles. If you peek behind the curtain of these record AI valuations, you're going to find a single, very blunt word, slop. That is exactly what Palantir executives called it, using the word slop 17 times on a single investor call to describe the outputs from major AI labs. Even though Palantir is hugely benefiting from this AI boom, their leadership is heavily critical, saying current AI is too messy and unreliable for big enterprises to actually use. It really highlights how even the biggest winners in AI are super skeptical of current product quality. Meanwhile, the pure AI labs are dealing with their own massive growing pains, and they're taking totally opposite approaches. Over at Anthropic, CFO Christian Rowe is basically sprinting to manage this unprecedented rapid growth for their Claude tools, laser-focused on locking down computing constraints. But then you have OpenAI. Late last year, CEO Sam Altman was actively talking about spinning off their hardware and robotics divisions completely, just to give them room to grow without weighing down their core software business. Adding a highly personal layer to all this corporate drama is the secret diary in the Musk versus OpenAI feud. Right now, a high-stakes lawsuit between Elon Musk and OpenAI has actually led to private diary entries leaking in a courthouse. I mean, just imagine the sheer mortification of having your private, highly stressed thoughts read out loud for the whole world to analyze, all because the future of a multi-billion-dollar company is on the line. And the global AI arms race, it is seriously accelerating. We're seeing Beijing-backed investors push startup DeepSeek to a staggering $50 billion valuation. At the exact same time, the White House is weighing new cybersecurity oversight for incredibly powerful new AI tools, like Anthropic's Mythos model. The global stakes literally could not be higher. Section 4. Tech in your living room. So how do these billions in R&D eventually get to us? Well, look at wearables. The feature-heavy Apple Watch absolutely remains the king. But there is this exploding trend in a totally different direction: screenless trackers. Consumers are rushing to buy chunky bands and stylish rings that don't even look like tech until you see the faint glow of the sensors against your skin. People want the health data for sure, but they are completely over the distraction of having yet another screen. Speaking of health data, slower walking, get your hearing checked. In a really fascinating intersection of health and tech, an Apple and University of Michigan study confirmed a direct link between hearing loss and slower walking speeds. Doctors are using this to highlight a very practical takeaway. If you notice yourself walking slower, address your hearing. It could quite literally lead to a longer life. To balance out all the heavy macro and geopolitical news, we have the Roomba guy's next act. Instead of a disc that sweeps your floor, his new robot is this expressive, furry, doe-eyed creature with a dog-like demeanor. The goal here isn't utility at all. It's meant to be taken home, snuggled, and cherished as a household member. It is such a clear sign of tech shifting from purely functional tools to actual emotional companions. Section 5. Geopolitics and what's next. Understanding both the macro numbers and these consumer microtrends prepares us for the week ahead, and the upcoming calendar is packed. On Tuesday, we have the CPI, the Consumer Price Index. Wednesday brings a PPI, the Producer Price Index, plus major earnings from Cisco and Constellation Energy. But Thursday is the big geopolitical catalyst. President Trump is scheduled to meet with President Xi in China to directly discuss trade and Iran. Which leaves us with this final thought. With billions pouring into AI and gadgets changing the literal speed at which we walk, will this record-breaking tech run rewrite the future of human capability, or are we just funding a mountain of chaotic slop? Something to ponder. Thanks for joining me for this explainer. Keep an eye on the data, and we'll see you next time.